How many people who are here today were here to hear my speech last year? Okay, you'll remember last year was a call to action. I said if you lived in Vancouver, if you knew the game or were interested in knowing the game, because of your proximity to where the game is played, that you had no excuse not to make $1 million. I had no idea that last year was going to be as good a year as it was. So anybody who played the game and didn't make $1 million should probably leave. I'm going to tell you something else, too. I think we're going to have a pretty good year in 2026. But anybody who thinks that 2026 is going to be like 2025 is somebody who believes in the tooth fairy. What we went through is really, truly one for the record books. Don't bet that the future is going to be as easy as the past. That doesn't suggest that there isn't money to be made. It just suggests that the easy money has been made. Don't get yourself used to being spoiled. Because although I think for 10 years there's going to be money to be made, you're not going to be able to make money on your mistakes, which you were able to do in 2025. I like to talk about cyclicality in these markets. I like to talk about the fact that you are in these markets either a contrarian or a victim. And it's important to remember that. It's important to understand how cyclical these markets are. It's important, too, not to confuse, and I have trouble with this, it's important not to confuse a bull market with brains. In a year like the one that we've been through, where your portfolio is up 100%, 125%, 150%, it's tempting to think I'm smart. That's what you want to think. The fact that the gold price doubled and the silver price tripled, of course, had nothing to do with it. It was all your mental processes. Believe me, sadly, it's not. And I want to leave you a story and a couple of sort of admonitions which will help you with this. I remember in 1984, after the bust of the oil bull market in the 1970s, I was in Midland, Texas, a town that's oil, oil, and oil. Yeah, they have cattle, but they're starving. I mean, the cattle don't matter. And I remember seeing a truck, a pickup truck, with a bumper sticker on it. And the bumper sticker went like this: God, please give me one more bull market. I promise not to waste this one. So that's what I'm going to tell you about this. You're in a bull market. Don't waste it. Do not waste it. Remember that you have not made the money until you've taken the money. It's important that you know that. You cannot spend that blue line on your brokerage statement until you sell it and grab the cash. I'm not saying to cash out early, but let me tell you two things I've done myself, and I'm not suggesting you do them, but I want to tell you what I did, and I want to tell you why. Whenever I see what you Canadians call a hockey stick graph, this exponential increase, I've learned in 50 years in this racket that the backside of a hockey stick is just as steep as the front side, but it's a lot less fun. And so what I do when I see a hockey stick graph is when most people get excited one way, I get excited the other way. One group of people says, oh boy, and an older group of people says, oh shit. And I'm an older guy now, so that's what I do. So I've done two things. In October of 2025, I decided it had been just too easy. And so I looked at my entire junior portfolio and I sold a quarter of it. I sold 100% of some positions. I sold none of other positions. But if you look at the whole portfolio, I sold 25%. By selling 25%, I recouped all of the capital that I had invested in the sector. In other words, I eliminated my downside and I paid the capital gains tax on it. So what you could say I did, if you wanted to quantify what I did, is I gave up 25% on my upside in return for selling all of my downside. I was fairly public about that, and the amount of hate mail I got, the amount of negative response on places like X, even in the real classroom, let me know I was doing a good thing. I've come to love hate, and the fact that the butchers and the bakers and the candlestick makers who are new adherents to the gold and silver ethos, the fact that those guys were uniformly opposed to me, let me know I was doing exactly the right thing. Last week, I had built up a fairly large portfolio of physical silver. mostly in the form of the Sprott Physical Silver Trust. Note that subtle commercial. And silver did extraordinarily well. I bought the silver back at a period of time when silver was really, truly hated. And I bought the silver because I thought it would cease to be hated. I thought that we were in a gold bull market, and when the generalist investor was attracted to the market by gold, that silver would begin to outpace gold. That's what has happened to me in prior bull markets. That happened. What I decided is that the reason that I bought my silver had occurred. The price had gone up, and silver to me was a speculative asset. I personally save in gold. I maintain liquidity in US dollars, and I speculated in silver. And I thought, you bought this silver, Rick, because you thought the price could go to 50, and you were wrong. It went to 70. At a certain point in time, a speculative asset needs to be sold. And so last week I sold about 80% of my physical silver. Now, I will tell you, I didn't exit the silver space. With half the proceeds, I bought high-quality silver stocks. Why the move from silver into silver stocks? Here's why. The silver stocks have not kept pace with silver. And if the silver price just maintains at its current level, let's say it just maintains, let's say, in fact, it doesn't maintain its current level, let's say it declines, if that's the right phrase, to 75 or 80. The silver stocks, I think, are priced on a net present value basis, discounting 40. So if the price holds at 75 or 80, I think those silver stocks re-rate. By contrast, if the price of silver just goes steady for a year, I don't make any money in the silver, and I make 50 or 100% in the silver stocks. In other words, to me, because silver occupied a speculative part of my asset base, I decided that I would confine my speculation to speculations that I thought were superior speculations. This isn't to suggest that I think the silver bull market is over. I don't. I just think that for my purposes, there was a better place in the asset class. The point of all this is, as I started out, you haven't made the money until you've taken the money. I'm starting to note, particularly in internet comments, people saying it's different this time. In other words, although all the circumstances that this market was predicated on existed in 2021 and 2022, when the stocks were a quarter or a third as expensive, the very fact that the prices have gone up validates the narrative to many people. Don't fall for that. Don't fall for that. You need to take money off the table along the way. You need to redeploy your capital within the sector. When companies have exhausted their potential risk relative to reward, you need to shift the money. How many people in this room have been in this market for 20 years? Raise your hands, please. Okay. Do you remember how you felt in 2012? Anybody remember that? Well, when you're thinking about how good you feel right now, remember how bad you felt then. And let that be an indicator of the caution with which you have to play a bull market. By the way, we're in a bull market that I think has legs. I mean, truly has legs. I don't think it's going to be as easy as it was. But as an example, the gold bull market, I think, would end when, as an example, the US government showed fiscal responsibility. What's the probability of that? Being an American, I won't lecture Canadians on government or foreign policy, but I would suggest that your country is at least as challenged as my country, which is not damning you by faint praise. And I think you're going to see in industrial materials a great market too. By the way, I don't think that we're in a materials bull market yet. I think the global economy is weaker than people think. And I think that the move you've seen in copper price is actually a muted market. But I don't think it's going to be as easy in the future as it's been in the past. It's important to know that. If you remember back to 2021, 2022, how good you would have felt if you were making 20 or 30% a year. Understand that making 100 or 150% a year is anomalous, and it ain't going to happen again. I want you to remember that this volatility, this cyclicality that you enjoyed so much in 2025 works both ways. I remember myself back to that great bull market of the 1970s. the most epic bull market of my career. And I can remember very well, very well, 3 different times in that decade where the gold price fell by 30% or more. One particular point in that decade, 1975, let me give you the history. 1970, the gold price is $35 US. Beginning of 1975, the gold price is $200. 6-fold move. And I'll tell you what, there were a whole bunch of people that believed in gold with the enthusiasm of a choir in a Pentecostal church, believing in God. In 1975, the price of gold fell from $200 an ounce to $100 an ounce. And many of those newfound believers wished they never learned to spell gold. All the belief that they had had at $200 evaporated when the price went down, when it was a better buy. And the people who got shaken out in 1975 at $100 missed a move from $100 to $850. The point of this is that you need to prepare yourself financially and psychologically for 20% pullbacks, 30% pullbacks, even 50% pullbacks. You need to understand your portfolio well enough that you have the conviction where price declines are opportunities as opposed to risks. The converse of that is that when you see spikes up, you need to harvest gains. You have not made the money until you've taken the money. Many of you know that for 35 years, I have for free, which is a very good price, graded people's portfolio, commercial. Go to ruleinvestmentmedia.com, list your natural resource stocks, and I personally will grade them for free, 1 to 10, 1 being best, 10 being worst. After the commercial, I'll tell you why I'm telling you this. I've taught a lot. I've graded almost 100,000 portfolios, I'm told. And I've learned a lot, too. I've learned some things that people do well, and I've learned some things that people do poorly. And I'd like to share those with you so that you can temper your performance in this bull market with the experience of 100,000 of your peers. The principal mistake I've seen is that people confuse strategy with tactics. Many people get the strategy right. The gold price is going to rise because of X, Y, Z. The copper price is going to rise. The uranium price is going to rise. But the circumstance that they think they're betting on is a circumstance that will take place over 5 years. These same people that employ a 5-year strategy have trauma holding stock over a long weekend. So there's a mismatch between their strategy and their tactic, and so they fail. They fail. They fail for no reason. They identify the opportunity, and they misplay the game. The second thing is that very few people do the work. I would ask each of you who speculates to limit the number of speculations in their portfolio to the number of hours per month they intend to work on their portfolio. I saw many people with 50 or 60, sometimes 100 stocks in their portfolio. And occasionally I'd call somebody and ask them about their portfolio. I'd say, what about this one? They say, well, I don't know. Well, why do you own it? I don't know that either. This does not work. Really doesn't work. The fact that you're here suggests to me that you aren't going to do that, but absolutely do the work. Attend the conferences like you're doing. There's some wonderful product here. The fact that you're in Vancouver, the fact that you have the ability to come here, that you have the ability to go to VRIC, that you have the ability to go to Roundup, puts you way ahead of people who don't live here. Do the work. Attend the conference. Be patient. That's a really, really, really good lesson. Be patient. The most important financial strategy of all times is compounding. And you can't compound without being in place. I found myself, looking back over my career, 50 years, that almost every one of my 10-baggers, never mind my 20-baggers or the occasional 100-baggers, have taken 5 years or 6 years. If you have trauma holding stock over a long weekend, the probability that you're going to get a 10-bagger is low. And if you aren't getting some 10-baggers, the chance that you're going to be successful with a speculative portfolio is nil. So be patient and be persistent. You absolutely, positively. I have in my 10-baggers, almost every 10-bagger I have or have had exposed me to a 50% share price decline at some point in time during the period I owned it. So you have to be patient, you have to be persistent. If you aren't prepared to do that, you should consider another line of speculation. It's truly, truly, truly required. And then discipline. Many people employ the strategy, got a hunch, bet a bunch. And that does not work. Especially it doesn't work in the juniors. I want to make you guys really sick before I make you well. If you merged every junior exploration company in the world together into one company, we'll call it Junior Explorco. There's maybe 2,500 companies. If they all, shed all their mortal coils, they become one company. That company, in a good year, would lose $2 billion. Expenditures over sales, right? In a bad year, it would lose $8 billion. Now, what should you pay for this company? We have some securities analysts out here. Should you pay 5 times losses? 8 times losses? In a bull market, you might have to pay 20 times losses. How rational is that? How much would you spend on the sector? Rationally, 0. Made you sick, right? Here's the thing. 10% of those companies generate so much performance that they add legitimacy and sometimes luster to a sector that loses between $2 and $8 billion a year. That's why you have to be disciplined. That's why you have to do the work. If you buy the sector, you have a portfolio full of flotsam and jetsam. You will do good. You will do well despite yourself in 2025, and you will get what you deserve in 2012. So when I gave you the admonition last year that if you lived in Vancouver and you did the work, you had no excuse not to make $1 million, understand that if you don't do the work, once you've made that million, you'll give it all back, sometimes more. It's important that you do that. You have an opportunity here that is unavailable to people who live elsewhere. You have the ability to attend conferences like this. You have the ability to walk in offices here and talk to the principals. But you have to use that advantage. You have to employ that advantage. And you have to use and employ that advantage very, very aggressively and very, very selectively. I don't think that this coming year will be as good as last year. That doesn't mean it's going to be a bad year. I think that we have 5 years or 6 years, maybe 10 years of a secular bull market in front of us, but it's going to be punctuated by cyclicality and volatility. You have to be financially and temperamentally prepared to make the most of this. You're in a wonderful place. And in the brief time I have left, I want to tell you how I am prepared to help you. A few things. If you want to know what I think about your natural resource portfolio, ask me. Go to ruralinvestmentmedia.com, list your stocks, and I'll rank them for free. Money back guarantee if you're not satisfied. Second thing, there's something called the Rule newsletter, written by Paul Harris and myself. Absolutely free. Sign up for it. You'll get it absolutely for free for a while. Someday you might not, but that's free. There's something called the Rule Classroom, by the way. There's 16,000 students, many of them here, who use the Rule Classroom, 300 hours of instructional material, absolutely free. Once again, money-back guarantee. 2 upcoming products that I really want you to pay attention to. I get pitched on a new deal about 3 times a day, and mostly I refuse. Mostly I refuse. If I listened to any pitch, I wouldn't have time to do anything else. But in the future, here's what I'm going to do. At the Rule Classroom, anybody who wants to pitch me, anybody can do it. But there's a caveat. You got to pay me $5,000 US, and you got to pitch me live in front of the students at the Rule Classroom. Not an advertising product, right? I'm not going to be hostile. I'm also not going to be friendly. It's going to be as though you came into my office and pitched me on your stock. But from here on out, I will accommodate anybody who pays me $5,000 and who is willing to do it in front of a live audience of 1,000 people. So those of you who are interested, stay tuned. I think a couple things will happen. I think that the audience of people who's willing to pitch me is going to self-select. Guys will say, well, I thought I didn't realize I have to pay to pitch you. Well, you were wrong. And I thought maybe I could pitch you privately. You were wrong. So anyway, stay tuned to this. The other thing we're going to do is Shark Tank. For sure, we're going to do this. We're going to assemble a panel, and all the time people say, my stock is undervalued. I'm going to say, yeah, maybe, prove it. Give me your pitch for 15 minutes, subject yourself to 45 minutes an hour of Q&A by my panel. Not friendly, not hostile. And then you have 2 hours of Q&A with the students at the real classroom. So keep your eyes open for those two products. We're going to introduce them in 2026. I think it'll go a long way to helping you all make your next $1 million. Ladies and gentlemen, thank you very much. Godspeed. Good luck.